And welcome back. Big changes are coming to our US housing market as mortgage rates have doubled since January 1st of this year. And on top of that, last week, we saw the biggest increases of housing inventory and also the number of reduced price listings so far this year. So in today's video, I'm going to share exactly what's happening right now with our US housing market regarding home prices, housing inventory, price reductions, and much, much more. And this will give us some indication about what lies ahead in our US housing market. So let's go ahead and dive right in. And this is a weekly video I make for you guys regarding data from Realtor.com. They also provide their own analysis regarding their own data every single week. But just like my previous videos, I actually didn't even read their analysis. Instead, I want to share my own analysis based on their data. They actually reported this last week regarding the most recent trends for the housing market for the week ended November 19th of this year. So actually go onto their website, and here's what you can pull here from their website here. And don't get scared. This is an Excel file that I pulled from their website here. But I also want to provide my own analysis about what's happening right now because for one, this column right here, the number of reduced price listings compared to 1 year ago is not even mentioned in their weekly updates. So I want to give you guys my honest opinion about what's happening right now in our housing market. I'm also going to be comparing this most recent week, which is November 19th, how that compares to 2017 through 2021. So stay tuned for that. I'm also going to provide a summary in today's video, as well as some housing market predictions towards the end of this video here as well. So hope you guys enjoy this video. And of course, if you do, please hit the like button. And of course, consider subscribing if you haven't done so already. I post frequent housing market updates so you guys can be more informed. And I actually really love making these videos for you guys. And of course, I hope you guys had a great Thanksgiving holiday here. So here's what we're seeing right now regarding housing inventory, home prices, and the number of price reductions in the US. Let's first talk about the median list price, which again is asking prices for houses being listed for sale. Last week, they increased by 11% compared to the same week in 2021. There hasn't been a whole lot of movement though over the past month or so because the gains on a year-over-year basis for asking prices has been more or less in the range of 11% to a 13% increase on a year-over-year basis. One thing I do want to mention is that asking prices on a year-over-year basis have actually been declining over the past 4 weeks. Not by a lot because they went from 13%, now they're 11% gain compared to 2021. But definitely something worth noting though, because the gains were more or less hovering around 13% for about a month. So in my opinion, what we're seeing right now is it's just what I'm saying right here in the comment here, that we're starting to see a seasonal slowdown in the growth of home prices over time because home prices tend to slow in the second half of the year. And of course, especially in November and December of each year. But of course, this decrease in home buying demand that we have been seeing due to this spike in rates is also factoring into this growth rate here, declining for the past 4 weeks in a row now. Let's also talk about housing inventory because last week that grew by 48.5% on a year-over-year basis, which by the way, that agrees to data from altosresearch.com. They're also reporting gains at 48% on a year-over-year basis. So Realtor.com is reporting a gain of 48.5%. And by my analysis, this is actually the biggest increase so far this year for active listing inventory or housing supply in the US. And on top of that, for the past 3 weeks in a row, active listing inventory has been increasing at the biggest gains so far this year. Let me briefly explain that because back on November 5th, during that time, that was also the biggest increase we saw so far this year. And then last week or 2 weeks ago, we saw a 45.2% increase, which at that time was also the biggest increase so far this year. But last week it increased again by about 3 percentage points to 48.5%, the biggest year-over-year increases we've been seeing so far this year. Yet another trend we're seeing right now regarding housing inventory is this right here, because housing inventory has been increasing for the past 10 weeks in a row. So we've been seeing this huge increase of active listing inventory, despite the fact that new listings have been decreasing big time for the past several months now. So this increase of housing supply over the past 10 weeks is not due to an increase of new listings. In fact, it's due to a decrease in home buying demand, as we're seeing fewer contracts being signed between home buyers and home sellers. And of course, houses are taking longer to sell right now compared to a year ago. And also, as a note right here, this increase in the past 10 weeks is pretty eye-opening given the fact that new listings have been declining by double digits for the past 8 weeks in a row. Let me share with you guys exactly what I mean, because ever since October 1st, new listings have been declining by double digits compared to the same time period in 2021. And on top of that, new listings have been declining from last year for the past 20 weeks in a row. In other words, we're seeing fewer new listings hitting the market this year over the past 20 weeks compared to the same time period in 2021. And despite this huge decrease, housing supply has been increasing for the past 10 weeks in a row. Again, not due to an increase of new listings, but due to a decrease in home buying demand. Now, here's something I definitely want to bring to your attention that's kind of new this week compared to previous weeks. Because look at this. Again, new listings decreasing by double digits for the past 8 weeks in a row. But look at the changes over the past 2 weeks though, because the growth rate or the declines are not as great as they once were. Because on November 5th, new listings were down by 19.7%. They decreased to 17.7% the following month. And then last week, declining to 16.8%. So we have been seeing declines in new listings. However, the growth rate has actually been slowing down for the past 2 weeks in a row. Now, of course, this is a very short-term trend. We're only talking about 2 weeks, but it may be an early sign about what may be lying ahead, because we may be seeing a new listing growth actually slow down. And that could cause active listing inventory to increase in the weeks and months ahead as well. And of course, I'll definitely keep you posted with the latest developments, of course. I want to make this note here as well, because new listings up by 16.8% last week is more or less on par with what Redfin's reporting as well, because Redfin's reporting new listings increasing or actually decreasing by 19.1% for the 4 weeks ended November 13th of this year, down by 19% over the past month, compared to a decrease of about 17% last week compared to the same week in 2021. Another trend that Realtor.com's also noted as well is that it's taking approximately 7 days longer to sell a house last week compared to 2021. 7 days is the increase in days on the market, meaning it's taking 7 days longer to sell a house compared to 2021 this time, which is also what Redfin's reporting as well, because days on the market is up by 7.7 days compared to 2021. Days in the market's at 35 days right now. Compared to this to 2021, it was taking approximately 27.5 days. On top of that, going back to Realtor.com's data right here, it's taking longer for houses to sell compared to 2021, now for 17 consecutive weeks now. And because of this, this is one reason why housing inventory has been increasing, because houses on average are taking longer to sell compared to 2021. Something I noticed this week that I actually didn't notice in previous weeks was this right here, because the days on the market hasn't really fluctuated too much over the past couple of months, because ever since September 24th, days in the market, or actually I should say September 17th, days in the market has fluctuated between 7 days longer to 8 days longer compared to 2021. So days in the market has more or less been plateauing or flattening out over the past couple of months. And again, a friendly reminder regarding days on the market. These are based on houses that actually have closed escrow or sales that have been finalized though. So this is really a lagging indicator of a US housing market. All right, that's days in the market. Let's have a look at the number of reduced price listings in the US, because look at this. Last week, they increased by 114.4% compared to the same week in 2021. And based on my own analysis here, this is the biggest year-over-year increase so far this year. Again, increasing by 114.4%. The previous year-to-date high was set on June 18th, when the growth rate at that time was up by 110.1%. But this week, increasing by 114.4%, in the number of reduced price listings compared to last year. On top of that, the number of reduced price listings has increased in 5 out of the last 7 weeks. I also want to give you guys an update regarding the share of reduced price listings because according to altosresearch.com, for the week ended November 18th, the share was 43%, meaning 43% of all houses listed for sale right now have already reduced their asking prices. Compare this to the middle of May, the share was approximately 21%. In other words, the share of reduced price listings has more or less doubled in the last 6 months. One thing I do want to mention though is that this share has only increased by 3 percentage points in the last 2 months. In other words, 2 months ago, the share was approximately 40%. Now it's 43%. So only growing by 3 percentage points in the last 2 months. Of course, it's important to note that the share is still increasing, but has been slowing down ever since August of this year. One potential reason for this is that maybe home sellers are pricing their houses more appropriately and not trying to break records like they once did. So in other words, we may be seeing fewer overzealous home sellers trying to break records. Now, before I share a summary of today's video plus some real estate market predictions here, I also want to share how this week compares to previous years, going back to 2017. And as I mentioned in previous videos, Realtor.com only provides data on a weekly basis going back to July of 2017. So that's why I'm only sharing going back to 2017 here. So have a look at this. Back in 2021 and 2020, we had a huge increase in home price growth. We also saw a huge decrease of housing inventory, declining by more than double digits in 2020 as well as 2021. And we also saw a huge decrease in the number of reduced price listings compared to 1 year ago. And of course, houses on average were selling much faster compared to the previous year as well. This is because back in 2021, houses on average were selling 10 days faster compared to 2020. And of course, back in 2020, at this time, houses on average were selling 14 days faster compared to 2019. Now, of course, I'm not going to be sharing every metric in today's video regarding the data going back to 2017. So feel free to screenshot and look it over yourself if you want. But I also want to provide some analysis though regarding 2018 because 2018 was a time when rates were actually increasing. The last time, or the more recent year, we saw rates increasing overall for the year. So in 2018, rates increased from 4 to around 4.5% by the end of the year. Obviously much different compared to this year when rates were about 3.3% on January 1st, and now they're hovering around 6.6 to around 7%. So obviously this year, rates have increased so much more compared to 2018, but at least we can provide some analysis regarding what happened in 2018 versus right now, given the fact that rates did increase in 2018, whereas of course in 2021 and 2020, rates were averaging around 3%, much different than we're having right now. So active listings increased by 3.9% compared to 2017. Much different than the 48.5% increase we saw last week. Also, asking prices only increased by 7.7% compared to 11% last week. We also saw new listings more or less flat compared to 2017, and also this year down by 16.8% because a lot of people have historically low rates and they don't want to sell their houses and give up those low rates, right? Also, in 2018, houses on average were selling 6 days faster than 2017, obviously way different this year. And of course, in 2018, only a 14% increase in the number of reduced price listings compared to the previous year. And of course, this year up by 114%. All right, I know there's a lot of information to cover in today's video, so let me briefly provide a summary of today's video based on my own analysis using Realtor.com's data here. Number one, inventory has been increasing for the past 10 weeks in a row and rose by 48% last week. The growth is significant given the fact there's fewer new listings compared to last year for the past 20 weeks in a row. And on top of that, new listings have been declining by double digits for the past 8 weeks in a row. In contrast, our housing market would look a whole lot worse if new listings were increasing, or in fact, if they were skyrocketing. but in fact, they are not. And number two, mortgage rates have been above 6.5% every day since October 1st of this year. This should slow down home buying demand further, causing inventory to rise in the weeks and months ahead. However, though, over the past 2 months, rates have changed very, very little. Because, for example, on September 19th, average rates, of course, for people with exceptional credit, was 6.4% for a 30-year fixed rate mortgage. Compare that to November 23rd, rates were at 6.6%. So rates have changed very, very little over the past 2 months. And number three, we saw a huge increase in the number of reduced price listings over the past month compared to 1 year ago. And last week was the biggest year-over-year gain we've been seeing so far this year. Additionally, the share of reduced price listings has more or less doubled over the past 6 months. It's also far higher compared to at least the past few years as well. But as I noted, the growth rate has been slowing down ever since August of this year. And number four, houses are taking longer to sell compared to the same time period in 2021 for 17 consecutive weeks though. This is a lagging indicator though of what our housing market was like approximately 1 to 2 months ago when the home seller accepted an offer from the home buyer. I expect this to continue to increase in the months ahead due to our seasonality of our housing market, but also due to a spike in rates that we've been seeing so far this year. Okay, let's talk about some huge potential changes that may be coming due to the fact that rates have been above 6% ever since October 1st of this year. Number one, more buyers are going to get priced out, or they're just going to opt to wait out this housing market given all the volatility as well. And also talk about this 1% rise in rates rule. For every 1% rise in rates, that causes a 10% decrease in buyers' purchasing power. And because rates have increased by about 3.28%, let's just call it 3.3% over the last 12 months, this causes a 33% decrease in buyers' purchasing power. And number two, there's still a housing affordability issue in the US. So home buyers looking to buy a house right now are going to be paying approximately $700 more per month to buy a median price home today versus 1 year ago, up by $700 more per month. And that's a giant increase of 60% on a year-over-year basis. And this, in my opinion, is one reason why our housing market is slowing down due to a lack of housing affordability. Number three, we'll likely see more declines in home sales and home prices for the remainder of the year. This could be significant given the rapid rise in rates. However, though, there's been very little movement in rates over the past 2 months. And of course, we'll have to see how home buyers react to that news that rates have been more or less plateauing over the past 2 months in a row. Number four, to combat inflation, of course, the Fed plans to raise rates further in order to decrease inflation over the long term. This will increase interest rates for HELOCs or home equity line of credits, credit cards, and new auto loans, but saving rates will also increase as well. We probably won't have too much long-term relief for mortgage rates until after inflation winds down further. And number five, we probably won't see the true effects regarding rates around 7% until November and December stats are released. If we want to wait for the National Association of Realtors to release their data for November, we have to wait until mid-December. And of course, for December, we have to wait until mid-January. Of course, I'll definitely keep you posted with the latest developments. And number six, subscribing is for free, and these videos take me hours to make based on all the analysis that I provide in today's video. Hope you guys appreciate that, and I appreciate you. Thank you so much for watching this video. Hope you have an awesome day.